questions. When a bank seems to run into problem, folks are asking, what is the central bank doing? What's the NDIC doing? What are everybody else doing? But again, my advice is read the books. If you have the time, or take time to read those books, if you're an investor, there's always an indication of if about in the books if the bank is running into problem. There's always the devil in the details. That's what it says. So let's get to Eronmosele Aziba. He's from Afrinvest. He's one of the investment analysts. He's joining us from our studios at the Nigerian Stock Exchange. Of course, Afrinvest every year publishes what you call the banking sector status report, and they have one that was released for this year. But I'm not sure that report envisaged a few of the events that are currently taking place. So what should we be looking out for? Eronmosele, good morning. What should we be looking out for in those financial statements from the banks when 2018 is wrapped up?
Good morning, boss, and thank you for having me once again. I mean, for investors and analysts generally, we're looking at the current position of the bank in terms of their earnings growth and profitability growth as well. We're also looking at some of the factors that could potentially pressure cost levels of the banks. Now, talking about earnings growth, you know, it's largely driven by both interest income and non-interest income. And more often than not, interest income is viewed as the income made from the corporations, because as a bank, your corporation is to serve as an intermediary between lenders and borrowers, and in that process you earn some income on your operations. So I mean, interest income growth for the banks, even though it has sort of slowed down this year due to lower interest rates environment, we've started to see that pick up as well. So that should also support earnings for the banks. But beyond that, I mean, you also have some metrics that have been put out by the regulator of the banking industry, the CBN. So looking at factors like liquidity ratio, capital adequacy ratio, which is quite important. I mean, one in which the CBN has stated about 10% for banks with national banking license, and then about 16% for banks that are considered as domestically, systemically important banks in Nigeria. And looking at that single factor, you can say that quite a number of the Nigerian banks are sufficiently capitalized to withstand some shocks that could potentially come in the market.
Okay, but again, when trouble happens, when problem comes, do you think there are enough indicators, as it were, in published financial statements to tell investors about the state of a particular bank even before those trouble begin to manifest into situations of whether it's a takeover, it's an acquisition, or M&A, or being taken over the bridge, as it were, in the case of Skybank, for example?
Well, I mean, sometimes one of the major indicators that you can look at is in terms of loan distribution from the banks, and also looking at the non-performing loans of the bank. So if you see a situation where a bank has a huge exposure to a given sector in the economy, and you're aware of developments in that sector, then you can have an idea of how this could potentially affect earnings of the bank. I mean, I think a clear-cut case would be developments in telecommunications industry. We know how that sort of pressured performance from some of the lenders last year with the issues around Etisalat and the exposure. We saw how that sort of affected some of the banks. Also, going back about 3 to 4 years ago, also looking at developments in the oil and gas, in the oil and gas and power space as well, as banks' non-performing loans surged due to some drawbacks that were recorded in that sector of the economy. So I mean, taking a look at how banks extend their credit distribution by sectors, and also juxtaposing that with developments in these sectors. Now, if you look at the Nigerian economy as a whole, you could also get a sense of how the bank could potentially do.
So with this year, we've had two situations: Skybank becoming Polaris Bank, and now Access and Diamond Bank announcing acquisition, whatever, M&A. potential looking for approvals to conclude this next year. So, of course, this is announced this year. It will be happening next year, they said first half. So, do you think investors will be taking a second look into the details of these banks and all banks by the end of this year to find out whether they are on the side of profit more than making a loss if anything should happen in their financial institution?
Well, I mean, definitely with this development, I believe a lot of investors would take a closer look at the books of the banks in which they're investing in, and also trying to see the current position of the banks. We know that with Diamond Bank, there were some issues around mounting NPLs due to exposure to the power sector as well, and how this had taken a toll on the capital buffers of the bank. So yes, this development is going to lead to investors sort of shining the spotlight on the banking industry. But I mean, from our own analysis of the industry, we have most of the banks currently in a healthy position, and I mean, I guess that's kudos to.
On Broad Street will finish off 2018. Eronmosele.
Well, for us, we expect to still see somewhat positive performance from the banks. I mean, especially the tier one banks in the industry. Over the years, despite the tougher operating environment, we've seen these banks demonstrate their resilience by consistently growing both top line and bottom line. Coming up with ingenious products as well that could also boost earnings for the banks. And for us, we believe that would be sustained into the full year 2018 period, although we believe that there could potentially be a moderation in the pace of growth, but by and large, we expect it to still be broadly positive for the banks.
What are you looking at on average?
Well, for us, we believe gross earnings, industry-wide gross earnings, should still remain in the double digits region, but due to expectations of some higher cost pressures as well on earnings of the banks and operating costs as well, we could see total industry profitability grow in single digits region.
If I have invested in the banking sector since January 1st, 2018, do you think I'm in the money today or I'm in the water?
Well, I mean, for any investor who invested in January and hasn't sold his position up until this time, the investor would most likely be in the red, in the sense that most of the banking stocks currently have a negative performance on a year-to-date basis, and this is largely in line with the generally bearish sentiment across the entire markets, really. I mean, in January, we saw the positive wave from 2017 sustained into the year, but a lot of investors have sold off, foreign investors exiting the market, and domestic investors also following suit, largely tied to the upcoming general election. So as a result of that, we've seen sustained sell-offs in banking bellwethers and generally across stocks in other sectors of the market. But I mean, we've consistently advised that with this lower sell-offs that we've seen in the market, we've seen some attractive, fundamentally sound stocks that have fallen to low levels that we believe are attractive. I mean, for any investor who has a medium to longer term view on the market, I mean, you can take advantage of this opportunity and